morning, Market Fatafat on ET. Now Nifty doing nothing exciting, back trading with a negative bias. 22,650 levels is what it's holding on to. But let's bring on board Chandan Taparia now to talk on the technicals as well. Chandan, very good afternoon. Thank you so much for joining in with us on ET now on Market Fatafat. First stock that you picked out for us is Tata Powers, and what is it in terms of the stock that you see? Where do you see it headed? We have seen a good up move for Tata Power. Do you think it's still got some more power left to go ahead?
Yeah, Tata Power is clearly showing the sign of power in next leg of rally. Technically speaking, it has given a consolidation breakout, continues to make the high top, high bottom on the daily and the weekly chart, entered into the new lifetime high territory. If I look at the derivatives data setup, we have seen fresh built up of long position along with put writing. So this momentum could continue. One can buy with support of 422, and here we have target to us 448 levels.
All right, so that's the take coming on Tata Power. Let's take a look at what Sobha is doing in trade today, because you have a note that's come in on Novama. In fact, it's come on a slew of these realty stocks, and Sobha actually was seeing a sharp uptick last time I checked. There you go. They've set a target price of 1,876 rupees per share. They're saying best ever pre-sales in FY24. Q4 pre-sales stood at around 1,500 crore rupees, which is higher by about 3% on a year-on-year basis. Also, they've said that the launches also stood at about 3.2 million square feet across 4 new projects. The company has clocked in highest ever pre-sales by 24 by value and volumes. The realizations also rose about 19% on a year-on-year basis in FY24. They also say that Sobha has launched 6 new projects during the year also. That's aiding the stock going ahead. So therefore, they have actually set a target price of around 1,786 odd rupees per share. So on back of that, you can see, or rather 1,876 rupees per share. I stand corrected on that particular front, and that's where the stock is trading higher by 5% now.
Okay, surely keeping an eye out on Sobha. But let's move on, talk about Voltas, because that's an interesting chart that has happened as well. And the jump that we've seen just in the last 1 month is almost 23%. They've good update in terms of the demand that they've seen as well. Chandan, given the run up that we've already seen for Voltas, what's the view on this? Would you still hold it for till we see the end of summers, or is it time to start booking some profits?
So I believe some sort of momentum will be there. In fact, last time we recommended this counter and it rallied by more than 10-12%. Yesterday also we have seen a decent run up, and today it's holding the gains at high zone. So I believe that the elite wave pattern and the heat wave will continue to support the price sentiment of the counter. So we are recommending to buy with support of 1290, and we are expecting the rally to extend to us 1380 as of now.
All right, let's move on then. And on the sidelines of the new product launches, Blue Star's B. Thiagarajan has spoken to ET now on the demand outlook for summer and their strategy to gain the market share in the room AC segment. Listen to what he has to say.
India is the fastest growing market. So today household penetration should be 8% based on a single air conditioner use. Okay. But unlike the washing machine or refrigerator will be one per home, ACs can be multiple per home. Okay. And therefore the market is expected to more than double by 2030. And perhaps that landmark year for India, 2047, we should surpass China's market, which is close to around 985 million. Now India is only 11 million. And 11 million to 80 million is the growth trajectory that is visible.
So we are interacting at a time when you have came up with some new products in the room AC segment, and also you're targeting to achieve a 15% of market share by FY25. Can you share some more facts on the same?
So we are somewhere close to 14% market share, and when you say all India market share, there will be pockets where you will be having 20% share, pockets where it is 15, pockets where we are 10. So it is a average market share is close to 14. Now it will be, I don't know the figure. It could be 13.75 to 14 because March figure is not known. So our stated goal 15 by 2025, FY25, and it's a tough order, but the market is growing. We have a complete range of products. We are investing in every aspect of the value chain. We are expanding the dealer network. We are increasing our advertising spends from 35 crores to 60 crores with Virat Kohli as the brand ambassador. We have made our products affordable, and there are attractive schemes that are running. Therefore, I'm confident that we will improve our market share further.
All right, so that was Blue Star Management talking about the demand and the outlook going ahead. But Snehi, coming to you, you have to on that you're watching out for realty company. Why is it news today?
Well, Schedule Realty Major TAC has announced a remarkable achievement in its luxurious real estate project in the Delhi NCR region. Now, the company has sold out apartments worth 1,400 crore rupees in the project TAC Kailasa 1.0 in the national capital. Now, with this, the company has set a new benchmark in the city's luxury real estate market. The property offers 3.5 and 4.5 BHK luxury residences and amenities, and the extensive mix of buyers includes high net worth individuals, business entrepreneurs, and top-tier professionals from the sectors belonging to technology, finance, and healthcare. So, on the back of this apartment sellout or the project sellout that they have gone ahead and done in Delhi NCR worth 1,400 crore rupees, the stock is up almost 3% as we speak.
Okay, surely keeping an eye out on TAC, but let's move on to talk about Canfin Home then. And Canfin Home is in focus because we have Morgan Stanley, which is maintaining an overweight trading target price of 1,000 rupees per share. I believe is that the share price will rise relative to country's index over the next 60 years. And in terms of overall Q4, they expect a strong result, and that's one of the reasons that positive upside that is there in terms of a surprise that could one out for in terms of asset quality. The stock has been underperforming other NBFCs in the last few months. So yes, there is a possibility that if a good set of number comes in from the company like they're expecting, then we could see an up move for the stock. The target price is 1,000 rupees. As of now, the stock is trading at 110. Keeping an eye on this one, up almost 1.5%.
All right, let's talk about Vedanta then, Chandan. We've seen these companies, the metal companies, primarily Hinzing and Vedanta, actually see a sharp up in trade today. But do you think that this renewed vigor that we are seeing in Vedanta will continue going ahead?
Most of the metal stocks are witnessing sustained buying interest. We talk about the Vedanta, Hinzing, Hind Copper. So Vedanta is in a good structure where sustained support based buying is clearly seen in the stock. So one can continue to be with long position, even those who are holding. They can keep the trailing stop loss of 322. Upside it can head towards 346.
All right, that's the take coming in on Vedanta then. And let's move on. Let's talk about Natco Pharma, and that particular counter is under pressure in trade today. At one point in time, the stock was trading lower by in excess of about 2%. Now it's trading lower by about 1.7% or so. They've got a warning letter from US FDA for the manufacturing facility at Kothur, which is in the southern state of Telangana, and the warning letter follows US FDA's inspection at the plant that was conducted in October last year. The company has said that the warning letter may not impact the supplies or existing revenues from the plant. However, it may actually lead to delays or withholding of pending product approvals from the site. The company has said that they will be responding to US FDA within the stipulated timelines and work to address the issues. So on back of the fact that they've got a warning letter for their plant in Telangana, the stock actually saw a downtick of 2%. Now it's trading lower by about 1.7% or so. Okay,
surely keeping an eye on that. Ankita, REC of the brokerage talking about this one. Where is it headed?
Well, yes, absolutely. There's a brokerage note on REC, and you can see a downtick of 2.4% coming in post the note. But CLSA has come up with a note on REC, and they are maintaining a buy actually with a target price of 560 rupees per share. They feel that the 5.09 lakh crore loan book is a slight miss for the management, which had given a guidance of 5.15 lakh crore rupees. Also, the dispersals for quarter 2 were pretty strong at 28% on a year-on-year basis, and they turned out to be a little weaker on a sequential basis though. But they expect the Lamco Amarkantak white packs in quarter 4 to come in at quarter 4, and on the back of that, CLSA is maintaining a buy on this particular counter, but we're seeing a bit of a profit booking coming in there. REC is down 2.4% right now.
All right, moving on, Chandan, let's talk about GAIL then. Oil and gas space has been the talk of the town when it comes to a lot of bigger investors, or rather a lot of investor interest of late. 27% last 3 months alone coming in for GAIL India. Where do you see it headed now? Do you think that it will take a pause or some more steam is left?
More move could be there. In fact, the stock rallied by 25% in last 3 months and continuously making higher tops, higher bottom from last 3 weeks. It has managed to surpass the previous hurdle of 196 and holding above the same. So I believe 196 could act as a support, and with that support, rally can extend to us 215 to 120 levels.
All right, that's the take coming in on GAIL. Let's talk about Ashiana Realty then, and that particular stock has hit a 16-year high in today's trading session. Vinny, no doubt, has given up all of those morning gains, but 9.6% is what it saw an uptick of. It hit its highest level since February 2008, and the reason being the company's Q4 sales actually jumped more than twofold. On the back of that, the stock actually saw a good perk up, and in fact, we also spoke to Dhaval Ajmera, who is the director at the Ashiana Realty, and he shared his guidance for FY25. Let's hear out how enthusiastic he is about the year going ahead.
We have about 7 projects which we will be launching in this financial year, which is a top line of 3,000 crores. And more over and above, there are a few more which are still under drawing boards, which we will be announcing soon. So this year, we are looking at a very buoyant growth plans, at least internally within ourselves. And definitely our internal target is to definitely surpass beyond what we have achieved right now, and we are at least looking at a uprise of 20-30% from the current year's sales. Our sense is the 7 projects which we have acquired this year, we will be launching in this current financial year, and all these are about 12 lakh square feet with a 3,000 crore top line revenue. I think the date for almost all of them will be between 3 to 4 years. So my sense would be at least 50 to 60% of this will be finished in the next 2 years. And thereafter, also our existing projects, which has already been announced, like Manhattan and Eden, Freeway, all those projects will also be completed in the next 2 to 3 times. So overall, I am seeing at least this 3,000 crores of revenue, at least 50 to 60% of it being recognized, as well as the existing projects, which are about 3,000 crores, will also be recognized in the next 2 years.
Okay, surely keeping an eye out on that. But Chandan, sale, what's the outlook for this one on the charts? Where do we see it headed, and what is the target that one should keep?
So selective metal stocks are doing well, and we believe that here we have potential outperformance, and because of the buying interest could emerge. Major trend positive witness of decline from higher levels because of the profit booking in the broader market. So it can be utilized with support of 144, and ultimately we have target to us 155 in steel authority.
All right, so that's the take coming in on sale. But Snehi, let's talk about Sula Vineyards, and why is the stock in focus?
Well, yeah, Cheryl, Sula Vineyards is in focus on their back of their Q4 numbers, the update that has come in. The company has announced that it has recorded highest ever Q4 net revenues overall, as well as for own brands and the wine tourism business. Net revenues grew by 10% to 131.8 crore in Q4, as against 120 crore reported in the same period a year ago. The company's own brand sales stood at 113 crore in Q4, registering a growth of 9% on a year-on-year basis. The wine tourism business jumped 31% to 16.4 crore in the fourth quarter from 12.5 crore posted in the fourth quarter of last year. Now, during FY24, when you look at it from a whole year basis, the net revenue increased 10% year-on-year to 608.6 crore, and for FY24, the firm's own brand sales also grew 11%, while the wine tourism business climbed 22% on a year-on-year basis. Their elite and premium own brands grew over 15% on a year-on-year basis in Q2 and FY24 as well. So, meanwhile, Sula has also announced the acquisition of ND Wines, a winery in Nashik district, with the transaction on track to close by the end of April 2024. So, on the back of the numbers coming in and this acquisition, the stock is holding up well in today's trading session.
Okay, surely keeping an eye out on that one. But let's move on. And 361 and Nuvama, well, both these are in focus after we have a brokerage note that came in from Jefferies on overall the wealth managers, brokers, what they're doing is they've initiated coverage on both these stocks. 361 buy rating, target price of 900 rupees. Nuvama Wealth also a buy rating and a target price of 6,000 rupees. What they believe is that India wealth managers are very well placed to ride the economic growth, the financialization of savings, as well as they are leading players in terms of benefiting the strong inflows of operating efficiencies that both these players could see. They expect these companies to deliver very strong growth, and obviously that's the main reason they expect the rise in the share and earning visibility for both of them, and that would support the value re-rating for both the stocks, and that is why we're keeping an eye on that. 361 not doing much, but Nuvama Wealth holding on to gains of 4.26%.
All right, there was one bright spot in the markets today. That was ICICI Bank actually, Vinny. But now if you look at the markets, Nifty Bank is also giving up all of its gains. Then talking about charts, ICICI Bank, do you think that this one will lead the private banking sector ahead? While everyone's been waiting for HDFC Bank to do that, do you think ICICI Bank will take it away?
Bank is holding well, and I believe that if market has to start the next leg of rally, ICICI Bank will contribute apart from buying interest in HDFC Bank. And at the same time, there is lesser volatility in ICICI Bank, lower delta and beta at the current market scenario. And already it has seen a long consolidative move of last 25 trading session and now holding well 1100 marks. So one can buy with support of 1085. We are expecting a rally to us 1150, 1155 in ICICI Bank.
Okay, let's move on. Talk about PI Industries. Ankita, why is this one in focus today? Is it also a brokerage note?
Yes, Vinny, it's on the back of a brokerage note by Citi. But before that, there is another piece of news that's coming in on PI Industries, and that is the fact that the company has announced a grant of stock options to eligible employees under the PI ESOP 2010. Now, the options have been granted the market price as defined under SEBI Regulations 2021 and PI ESOP 2010. And this is going to be at a price of 3,243 per option, calculated at a 15% discount to the closing price of the company's share on NSE and BSE with the highest trading volumes. That's the news coming in on PI Industries. Also, Citi has maintained a buy rating with a target price of 4,500 rupees per share. Now, the open upside 9-day catalyst watch is on the watch, and also the management's guidance for continued strong growth in FY25 is something that is positive for the company. They expect PI to report a 15% revenue growth in the CSM business in Q4, and concerns around the impact of generic competition in pyxoromine sulfine exit, but management is confident for the growth as of now, and on the back of that, the CLSA is maintaining a buy. But currently, PI Industries is trading with in trade today.
Like tech, and that particular counter saw a sharp up move in trade today, approximately 10% up move, taking the stock to the highest level since March 4th, holding on to those gains. The company has approved opening QIP on Monday, and they've set a floor price of that at around 119 rupees per share. They are aiming to raise about 1,000 crore rupees via that QIP, and post launch of the QIP and that news, we've seen the stock actually see a good up move in trade today, 10% actually for the stock.
Like tech on the back of that, but City Union Bank, Chandan, was that making to your list? What is it that you're finding exciting? Because last 3 months we've only seen around a 6-7% return. So what's the outlook now?
So the outlook is positive, and we are consolidating from last 3-4 days in the counter. The good part is in the last week we have seen a decent run up from 156 to 158 and now consolidating in the range. So technically it is forming a fall and flag pattern where a small fall up can lead to the next leg of rally. So I'm just waiting for a decisive move above 158. The rally can extend to 165. So it's going to be a conditional trade, buy above 158 with support of 152, and target will be 165, 168 zone.
All right, moving on. Snehi, let's talk about PCBL, erstwhile Philip Carbon Black. Why is this one in focus?
The stock is in focus on the back of a new capacity that they've commissioned. Now, a 12 megawatt power plant has been commissioned by PCBL in Tamil Nadu, or PCBL Limited, which is a wholly owned subsidiary of the company in the state of Tamil Nadu. Now, the total capacity of the cogeneration power of the company and its subsidiary stands at 122 megawatts. So, on the back of this new capacity expansion and the new power plant that they have up in Tamil Nadu. The stock is up 1.3% off the highest point of today's trading session. The stock was as high as 283 rupees today, but well, yes, holding up with gains of 1.3%.
Let's move on, Ankita, then talk about an auto name, Maruti Suzuki. What is the reason that we're keeping an eye out on Maruti Suzuki today?
Well, yes, Maruti Suzuki is in focus today on the back of a brokerage note by Morgan Stanley, and they are maintaining an overweight on this count. They've hiked the target price to 14,322 rupees from 11,228 rupees per share. Now, the hybrids are seen as an attractive bridge in the EV transition globally, is what Morgan Stanley feels. The hybrid takeoff in India has been a little slow, but this could actually change going forward. Also, rising news flow on hybrid duty cuts in India is a big positive, and Maruti is the best to navigate the current landscape in that with that regard. And on the back of that, they're maintaining an overweight on this counter. Currently, the stock is pretty flattish, just trading in the green now, and with an uptick of 0.2% right now.
That is Maruti Suzuki for you. That is in focus in trade today. But Vinny, let's talk about a recently listed counter, popular vehicles, and this one on our radar today.
So obviously this is on the radar because they've reported their numbers at 9-month FY25. So yes, FY24. Beg your pardon. Reaching a year ahead, but yes, I'm just going to hold on to that. For the 9-month period of FY24, overall, so that is still December quarter because they just listed. So first they give the Q3 numbers. So this is what we're watching out for. Revenue saw a growth of around 20%, 4,274 crores is what it's coming at. While in terms of overall the profits of the company also recent growth of around 12.5%. This is for the overall 9-month period. That's at 56 crores. So profitability is improved in terms of the revenue growth has continued to sustain as well. On the back of that, we are keeping an eye on popular vehicle. Obviously, given it opened up on the positive side, but with the markets, it's given up trading almost at the day lowest point. But a decent set of numbers surely came in from the company.
All moving on, Ankita, let's talk about Paytm. Why is this making to your list?
Well, yes, Paytm is in focus today on the back of a note by BofA, and they have apparently resumed coverage with an underperform rating for the counter and with a target price of 400 rupees per share. Now, they feel that the lending business growth is likely to be gradual, but the competition is high in the payments business. Now, the earnings recovery and the re-rating is likely to take some 2 to 3 odd quarters, and they expect the Q4 numbers to be weak for obvious reasons given the RBI action on the company. They also expect the estimate to bottom by Q1 of FY25 as full impact of the 3-month ban on the business is likely to be visible now. Now, Paytm would also have to spend more on marketing branding to help improve and strengthen its brand positioning in the market. The combination of lower revenue growth and margins are likely to push back the net income break even for the company, and they now expect Paytm to achieve an EBITDA break even in FY27 and a net income break even in FY28. And we can see Paytm declining in trade right now. It is since morning it has been declining, and right now it's trading with cuts of 2% right now.
All right, so that is Paytm for you, and it's been a while actually. I've seen Paytm make it to the list, isn't it? There was a time when it was a part of Fatafat list every day, Vinny.
Absolutely, but yes, finally making come back to the Fatafat list right now is Paytm. But saying Dilip Buildcon, what is the reason that we're picking this stock out today?
Well, yes, Manny, the company is in focus because the company has been declared the L1 bidder or the lowest bidder for the project worth 1,092.5 crore rupees by the Haryana Rail Infrastructure Development Corporation in EPC mode in Haryana. Now, the contract is for the new BG double railway line of the HORC project between stations Pritla and Dhulawat in Haryana for the design, supply, installation, testing as well as commissioning of general electrical services for a total length of 21.14 kilometers. All of this is on the EPC mode. Now, the bid project cost including GST is 1,092 crores like I mentioned, and the project is to be completed within the next 36 months. On the back of this win, the stock started the day on a positive note, was in the green, but has slightly slipped onto the negative territory with a slight negative bias. Stock very fast right now as we speak.
All right, so that is Dilip Buildcon for you, giving up all of his morning gains, no doubt, but has been declared as L1 bidder for a project. But Chandan, let's talk about Century Textiles, and how is this one looking on the charts to you? No doubt the commentary for coming in management has been positive, and that's also one of the driver of the stock moving higher over the last few trading sessions, or over the last 1 month or so. What's your coming in on the charts now?
It's continuously making higher top, higher bottom formation. Before starting its move on last trading session, it witnessed some conservative that itself made a positive price pattern similar to pole and flat as bullish implication. So trend is positive. It witnessed a positive price action and entering into the new high territory. So expecting further rally of 8 to 10%. One can buy with support of 1750. Our target was 1850.
All right, let's talk about Hinzing. Then a short while ago, while talking about Vedanta, did mention the fact that Hinzing is also seeing a sharp up move in trade today. It is hit over 14-month high on an intraday basis. It saw an up as much as 10.6%, taking the stock to the highest level since January 2023. The company is India's largest miner, and last week they saw highest production in volumes in FY24, which was higher by about 5% year-on-year basis. But not just that, Vinny, apart from gold, you also have globally silver prices that has rallied to their highest level since June 2021. The stock is up for 7th consecutive session, seeing a rise of over 30% during the period. So not just gold, it is silver as well. So I think artificial jewelry is the best for now.
Absolutely. That's all we can go for right now. Let's wait and watch that. But yes, surely interesting one to watch out there over there. But let's go and talk about Nykaa. You know, obviously they did come out with their update. When we spoke a couple of days back, strong update that came in from Nykaa. But today it's a different story because seems like competition is building over there. Tira Beauty has surely come in, and now seems like they're making some launches in the beauty space and more in terms of overall private label brand that they'll be focusing on. And this is obviously under Reliance Retail. But Aishwarya is going to be joining in with us to tell us more on the updates on that. And she's got some exclusive. Okay, maybe later we'll connect with Aishwarya again. But surely Reliance Retail is planning to go all out in the beauty segment. Other than that, the company plans to introduce new beauty products by the end of 2024. All the standalone stores of Kiko are to be operated by Reliance Retail. They have acquired this franchisee as well. So yeah, we're keeping an eye out on that.
All right, so Nykaa on radar on rising competition, maybe. But on that note, we are done on this edition of Market Fatafat. Thank you so much, Chandan, as well as Snehi, Ankita, and Osho for joining us on the show. As we wind down on this edition of Market Fatafat, here's a quick programming note for all of our viewers. Shattering the glass ceiling is not an easy feat for all the women out there, but ET now has something that can help them face this challenge and move a step forward. We bring to you Buy Now, Sell Now Women's Special with a sharper focus on women's investment goals and ace market experts actually. So mark your calendars for every second and the fourth Wednesday of every month, and not from the makers of how to like a girl or fight like a girl. Here's a masterclass on how to invest like a girl. So don't miss this. Tomorrow is the first episode of Buy Now, Sell Now Women's Edition at 11 a.m. For now, goodbye from Team Market Fatafat.
If you like this video, then like, share and subscribe to ET Now.